Welcome back to the Brent Bruce Daily. Today is December the 20th, 2022. It is now 2:36 p.m. Central Time. And you never know where information is going to come from or what is going to happen around the world that might affect home loan interest rates. And not many people understand that any type of geopolitical or global economic activity does affect home loan interest rates because mortgage-backed securities are bonds, and bonds compete with other bonds. They don't just compete with the 10-year treasury like we talk about often. They also compete with international bond funds or other bonds and treasuries that maybe the Bank of Japan or the Bank of China or the Bank of England might be selling as well. So if the Bank of England is offering 10% on their 10-year treasury equivalent, a lot of people might say, hey, the Bank of England, they seem pretty reputable. I'm going to buy that bond instead of US bonds. And that is the competition that we deal with on a global level when it comes to bonds. And again, mortgage-backed securities are bonds, and mortgage-backed securities are what truly set interest rates on traditional, standard, Fannie Mae, conventional, even on government loans, FHA, VA, and USDA. So this is what affects the interest rates that the residential home buyer or the residential real estate agent are really looking at. So let's take a look and see what happened today. All right, so if we go over to the charts, we're down 23 basis points on our mortgage-backed security, which is what we do not like. We do not want the mortgage-backed security price to go down. The 10-year treasury is up 11 basis points on the yield. We do not want the yield on the 10-year treasury to go up. Both of these would cause interest rates on our standard residential home loans to go up. Let's take a look at the chart right here. So this is the mortgage-backed security chart. Is it? Yeah. This is the mortgage-backed security chart. And we talked yesterday about banging up against these ceilings and that we had a triple floor of support. We felt pretty confident that we had a triple floor of support under us, the 25-day moving average, the 100-day moving average, and this Fibonacci level at 100.758. Well, we broke below all three of those briefly and started to climb back throughout the day. Why did that happen? That happened because the Bank of Japan made a change to what affects their 10-year treasury equivalent. Okay, so kind of like when the Fed makes a move, that's what happened in Japan, and it affected the yield, which also changes currency. So there's a currency change, which is, how much is the peso against the dollar or the yen against the dollar. There's currency exchange, which is a whole nother ballgame. But what they did today affects currency exchange as well as the yield on their longer term bonds. That caused some competition with our 10-year treasury, which is why you see it up 10 basis points on the yield, and home loan interest rates are not liking that. Now, not too big of a move. It's not like it fell through the floor or anything like that. I guess it fell through 3 floors, but it didn't fall way down here to this next Fibonacci level. And we are fighting our way back. We are now banging our head up against the 25-day moving average. So what is that doing to our actual home loan interest rates? So let's take a look at our scenario here for the Brent Bruce Daily Conventional, very well qualified 30-year fixed customer. We are at, it says 6.25. Now, you remember, we were talking about like 5.875, 5.99 a few days ago. So just a few changes, a little bit of a breath, and now we're back to 6.25. If we open this up, how much is it going to take to get down to that 5.99? Well, less than a half a point, 0.366. On our scenario that we're looking at here, it's only costing $1,318. Let's open this up here. I'll show you the scenario that we're running. This is a $480,000 purchase price with 25% down. Very well qualified customer. All right, so this is where we are currently on our 30-year fixed conventional Brent Bruce Daily scenario. What you need to understand is that what happened today was an international move by another country that affected our mortgage-backed securities. What are we waiting for this week to help moving us in the direction that we want to go? The personal consumption expenditures report is coming out this Friday, the 23rd of December, and this is the Federal Reserve's favorite measure of inflation, and we have every reason to believe that it's going to show inflation is subsiding and that we should be able to make back the losses that we've experienced in the last few days and probably some more than that. So hopefully we will finish 2022 talking about somewhere in the high fives without any points on our Brent Bruce Daily. We will take a look. In the next couple of days, I'll be giving you our expectations and more detail on what to expect for the personal consumption expenditure on Friday. Let me know your thoughts. Make sure that you like, subscribe, and share, and always comment. I always respond to the comments that I get. We'll talk to you again soon. Have a great day.